How and why is Ford committing approximately $2 billion in repurposing EV battery plants into a new US-based BESS business, targeting at least 20 gigawatt-hours per year of deployments by 2027, in a storage market projected to reach about 220 gigawatt, 972 gigawatt-hours of annual additions by 2035? In December 2025, Ford announced a new BESS business with planned capital expenditure of approximately $2 billion over 2026-2027. Ford stated the BESS business will repurpose underutilized EV battery plants in Glendale, Kentucky, complemented by a new LFP battery plant in Marshall, Michigan. Ford plans to have initial BESS production capacity online within about 18 months of the December 2025 announcement, with first shipments beginning in 2027. Ford is targeting at least 20 gigawatt-hours per year of deployed stationary storage capacity by late 2027 as part of the new BESS business. Global annual BESS additions are projected at about 92 gigawatt, 247 gigawatt-hours in 2025, and roughly 220 gigawatt, 72 gigawatt-hours by 2035. Utility-scale BESS installations account for more than 50% of global BESS revenue, with grid-scale and data center systems forming the largest segment by value. Ford's announced BESS product strategy focuses on grid-scale and data center systems, plus residential energy storage, rather than solely behind-the-meter commercial installations. Here's the problem. As part of a broader EV reset, Ford will discontinue the all-electric F-150 Lightning and several other large EV programs, refocusing on trucks, hybrids, and a smaller set of affordable EVs. Ford expects to record approximately $19.5 billion in special items related to its EV reset, with around $5.5 billion of that as cash outflows in 2026-2027. A substantial portion of the anticipated $5.5 billion cash outflows in 2026-2027 is tied to unwinding the Blue Oval SK joint venture and to EV tooling and related investments. Under the December 2025 dissolution of Blue Oval SK, Ford took full ownership of 2 Kentucky battery plants, while SK On retained ownership of the Tennessee plant. Ford has stated it will convert the Kentucky battery capacity, originally designed for more than 80 gigawatt-hours per year of NMC EV cells, to produce LFP batteries for BESS applications. For 2025, research firms' global BESS market value forecasts range from approximately $13.7 billion to about $76.7 billion. A spread of more than 5-fold. For 2030, published forecasts for the global BESS market size range from around $43 billion to approximately $172 billion, again showing variation of more than 4-fold. Here's their position. Morgan Stanley analysts estimate that if Ford reaches a 20 gigawatt-hour per year energy storage run rate, it could generate approximately $4 to $5 billion in incremental annual revenue. The Morgan Stanley estimate implies a blended BESS system average selling price of roughly $200–250 per kilowatt-hour at 20 gigawatt-hours per year and $4 or $5 billion revenue. RoMotion highlights that Ford's existing U.S. battery factories can be retooled for stationary storage, giving a favorable position under IRA and FEOC rules compared with import-reliant competitors. Forecasts indicate that lithium-ion batteries, particularly LFP chemistry, are expected to account for approximately 89% of BESS deployments by 2035. Industry projections suggest global BESS deployments will grow at a compound annual growth rate of roughly 15 to 25% through 2030. Ford's BESS product strategy emphasizes grid-scale and data center systems alongside residential energy storage rather than only behind-the-meter commercial projects. Ford has identified LFP prismatic cells as the core chemistry for its utility and data center BESS products, with smaller capacity LFP cells planned for residential systems. Ford explicitly identifies AI-driven hyperscale data centers and grid decarbonization as key demand drivers for its planned BESS offerings. Ford acknowledges it currently lacks a multi-gigawatt track record in grid-scale system integration and energy management software. Company and analyst commentary note that incumbent BESS providers such as Tesla, Fluence, and BYD already have extensive portfolios in these system integration and software areas. Looking ahead, the U.S. Inflation Reduction Act, including Section 48E investment tax credits and FEOC rules tightening from 2026 onward, provides stronger incentives for domestically manufactured battery cells and systems than for imports. Ford positions domestic LFP cell manufacturing at its Kentucky and Michigan plants as a key differentiator expected to qualify its BESS products for U.S. investment tax credits and avoid FEOC-related penalties. With a target of at least 20 GWh per year of deployed stationary storage capacity by late 2027, Ford is planning this level of BESS deployments. If Ford attains a 20 GWh per year energy storage run rate, Morgan Stanley's estimate of approximately $4 to $5 billion annual revenue at around $200-250 per kilowatt-hour frames potential contribution. Because utility-scale BESS installations and data center systems account for more than 50% of global BESS revenue, Ford's focus on these areas concentrates on the largest revenue segments. Analysts characterize Ford's move into BESS as an offensive pivot that redeploys stranded EV battery assets into high-growth stationary storage markets while reducing exposure to volatile EV demand and margin pressure.